What if using cryptocurrency was as simple and intuitive as buying something online with a credit card? For years, the immense potential of digital money has been overshadowed by complex technical hurdles. The need for multiple steps, obscure jargon, and clunky interfaces has kept the vast majority of people from engaging with this revolutionary technology. But now, a seismic shift is occurring in the world of payments, driven by a company that has for decades quietly shaped the very foundation of online commerce. This isn't just about a new feature or a small market adjustment. It's about a fundamental reimagining of how we interact with value on the internet, promising to onboard millions of everyday users into the digital asset space far quicker than many predicted. Get ready, because the future of money is about to become refreshingly simple. In a landmark move that promises to significantly redefine the landscape of digital payments, a powerhouse in the fintech industry has just confirmed its acquisition of a rapidly growing startup. This company specializes in making crypto wallets virtually invisible to the end user. Imagine digital wallets embedded directly into the websites and applications you already use every day. This strategic purchase effectively eliminates the traditional barriers that have plagued digital asset adoption. Things like cumbersome browser extensions, the daunting task of remembering obscure seed phrases, or the frustrating requirement of extra logins just to complete a transaction. The startup at the center of this acquisition has developed an innovative solution that allows developers to create powerful applications that feel effortlessly familiar, like the best of what we call Web 2, while being underpinned by the robust and decentralized power of Web 3. What this means in practice is a dramatically simplified user experience. Instead of being redirected to a separate platform or needing to manually connect a third-party wallet like MetaMask every time you want to make a transaction, you can simply click, sign, and instantly complete your action. This is the essence of frictionless commerce, and it's a game changer for digital assets. The technology developed by this firm is already incredibly widespread, actively supporting over 75 million user accounts across more than 1,000 distinct applications, quietly orchestrating billions of dollars in transaction volume. This isn't just a speculative gamble for the acquiring company. It's a calculated move by an organization renowned for its foresight in the payments industry. They built their reputation by enabling thousands upon thousands of online stores to seamlessly accept traditional currency payments, transforming what was once a complex process into a streamlined click-and-buy experience. Their monumental influence is undeniable, with their payment volume soaring to 1.4 trillion in 2024 and their system trusted by over half of the largest companies in the Fortune 800. This impressive track record clearly demonstrates their core philosophy: if you make something easy, people will use it. Their latest strategic investment unequivocally signals their belief that the future of payments is frictionless digital assets, and this acquisition is designed to accelerate that adoption exponentially by systematically dismantling every conceivable barrier. The fundamental issue with most existing cryptocurrency wallets today is that they significantly impede user conversion. Consider the typical onboarding journey. A user often needs to first download a separate wallet application, then go through a multi-step sign-up process, and finally figure out how to securely fund that wallet with digital assets. Each one of these steps acts as a point of friction, causing many potential users to abandon the process entirely. When you add the common requirement for Know Your Customer, or KYC checks, which involves submitting personal identification, even more individuals are deterred from ever engaging with digital assets. This isn't a minor inconvenience. It represents a major bottleneck that has severely limited the mainstream integration of cryptocurrencies into everyday commerce. This recent acquisition is far from an isolated incident. It's a crucial component of a much broader and aggressive strategy by this payment processing leader to firmly re-establish itself in the digital asset space. They were, in fact, one of the earliest payment companies to embrace Bitcoin way back in 2014, although they later paused that service in 2018. However, they made a decisive return to crypto last year, indicating a renewed and robust commitment. A major stride in this direction was their substantial acquisition in October 2024 of a leading stablecoin orchestration platform. This pivotal purchase allowed them to quickly introduce stablecoin-funded accounts, empowering businesses in over 100 countries to hold, manage, and seamlessly send and receive US dollar-pegged stablecoins with the same ease and efficiency as traditional bank transfers. This comprehensive approach underscores their unwavering dedication to merging digital assets and traditional financial systems so thoroughly that the distinction between them will eventually become almost meaningless.
The overarching vision driving these strategic moves is to foster a new generation of truly global internet-native financial services. By making the underlying crypto infrastructure more accessible and user-friendly, this influential company is actively empowering developers across the globe to build more inclusive and efficient financial solutions for everyone. The message is clear. If the technical complexities that make digital assets seem like an arcane science are removed, these powerful tools will become as ubiquitous and intuitive as any other online service. Imagine the possibilities. Not just advanced trading platforms, but also everyday businesses like restaurants seamlessly accepting digital currencies for payments, or multinational corporations effortlessly managing global payroll in digital assets. These are not distant pipe dreams. These scenarios are rapidly becoming a tangible reality thanks to this focused push for universal usability. This drive for seamless digital asset integration isn't exclusive to one major player. It's a prevailing trend within the broader industry. For example, there's a distinct application that has similarly prioritized simplicity, speed, and secure onboarding for its users, mirroring the core principles demonstrated by the technology recently acquired by the payments giant. However, this particular application has carved out its niche by specifically catering to the existing digital asset community, the active traders, innovative builders, and passionate enthusiasts who require an immediate, lightweight, secure, and highly scalable wallet solution today. This application is designed specifically for the crypto-native audience, offering features such as no identity verification barriers for account setup and a truly non-custodial approach to asset management. For users who engage with its associated digital token, there are additional benefits like the potential for higher staking rewards, significantly reduced transaction fees, and enhanced opportunities for participating in network governance. Some independent market analysis has even suggested a substantial price increase for this token by the end of next year, highlighting the wider market's recognition and validation of user-friendly, self-custodial solutions as key drivers of future growth. Ultimately, what these developments underscore is a crucial insight into the next significant phase of growth for the digital asset economy. It will not primarily be driven by speculative interest in individual cryptocurrencies, at least not directly. Instead, the paramount factor will be usability. The bold strategic decisions made by this leading payment processor decisively validate the emerging consensus that the future of digital asset payments is inherently seamless, deeply embedded, and utterly frictionless. This also reinforces a broader industry-wide movement toward making these transformative technologies genuinely accessible to everyone, far beyond just the early adopters or the technically proficient. This is a powerful signal that the era of bewildering and cumbersome crypto interactions is swiftly drawing to a close, paving the way for digital money to truly integrate into the fabric of our everyday lives and online experiences. Thank you for joining me today and for staying informed about these pivotal advancements in the evolving landscape of digital payments. It's truly exciting to witness how these innovations will shape the future of online commerce and financial interactions for us all. Be sure to subscribe for more insights and updates as this dynamic space continues to unfold. Until our next conversation, take care.